kind of interesting development at Discover yesterday. So the CEO, Roger Hochschild, basically resigned effective immediately, and just totally out of the blue. And the company, when they reported their second quarter numbers, if you remember, the stock was off, I think 15 or 16%. When they reported, the results weren't great, but what the market cared more about was this idea that they disclosed they had misclassified a lot of their cards historically, I think going all the way back to 2007 in terms of how they were recognizing volume related charges. So if a card is a certain type, you charge a certain amount. If it's another type, you charge a different amount. And so they had, to their advantage, been misclassifying cards. And at the same time, they disclosed that they were under a proposed FDIC consent order, but didn't give details as to what it related to. So the stock was down pretty significantly on that. And then, fast forward about a month, and all of a sudden, out of nowhere, the CEO, who's been there a long time, resigns again, effective immediately. And one of the board members has taken over, on an interim basis, but, obviously not a good sign. We can say that confidently. Look, I think we'll have to sort of find out. I mean, it's pretty shocking, when something like this happens. You naturally sort of tend to kind of think bad things, assume the worst. I don't think that's entirely unreasonable given sort of the swift nature of the departure. But bottom line is we'll have to sort of wait and see what comes out here. I guess I'd be a little surprised, given they had already disclosed both the billings issue and the consent order. If it were solely related to that, I suspect there's more that'll sort of come out here over time. But also in the background, you've really got sort of growing strains across a few different pockets. You've got, large cohorts of earners who, as we've talked about on the macro side, have fully exhausted their excess savings built up from the pandemic period. They continue to struggle from just a cost of living standpoint. They don't have asset appreciation generally that helps them to offset this. I think also about the fact that anybody who's basically bought a home or bought a car or, racked up credit card debt over the last 12, 18 months has done so at a very high cost, both in absolute terms as well as obviously on the financing side. So, of course, on the labor market front, we're seeing, increasing signs of stress, right? So we've talked about overtime hours, temp staffing, both being down year over year. We talked the other day about ZipRecruiter, having a really dire sort of 2Q earnings result, talking about the recruitment industry just falling out of bed completely, so to speak. And, we're starting to see some data sets suggesting, so I talked about it yesterday, that, a white collar recession is really starting on the labor front, is starting to take hold. And then on top of all this, as we've talked about, you have this poised resumption of student loan payments in about 5 or 6 weeks. Put all these things together, and I think it paints, a pretty challenging backdrop.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.